Hello friends, one of our viewer wanted me to review three companies, which is HSCL, Paracables and Paradeep. So in this video we are going to analyze these stocks and I hope we all will learn something new from these analysis. So let's start. So the first company is HSCL, Himadri Specialty Chemical, and if I look at 1 year return, it has provided 76% return. If I look at 5-year return, then it is in negative. So anyone who has invested in this stock in 2018, he has still not recovered his capital. Now if I look at maximum return, you will see a chart pattern which is very fluctuating with lots of ups and down. And chart pattern tells a lot of things about the company, and I have mentioned it earlier as well, that we should always go for companies whose chart pattern is going from bottom left to top right, and we should avoid companies whose chart pattern is the other way around. So this share clearly does not fit into that criteria. Its chart pattern is not going in that direction. The chart pattern has lots of ups and downs and it is almost flat. It just went up during this period, but again it has come to its previous range. And if I measure the falls in this company, so you can see this company fell around 67% at this time. During this time it was around 52% down, and during this time again it was down by around 75%. So you can see how risky the company is, and the market cap of this company is also very small, which is around 3,900 crore. It is behaving like a typical small cap company, and small cap company share can go down by easily 50-60%. So this was on the chart. Now let's look at the business of Himadri and the numbers. And the product that it manufactures are used in industries such as paints, plastic and fiber, anti-corrosive material, defense, aluminium, infrastructure, rubber industries and power industries. And it has clients like Vedanta, MRF Tires, Apollo Tire, Pidilite, Hindalco, Cooper Standard, Birla Tires, Seat, Goodyear, etc. So clients are well-known company, which is good. And we can see that the company has done capex during FY22, which is always a good thing for any company. And one more thing that we can see here is that company is currently focusing on making raw materials for lithium-ion battery, and it is aligning itself to the transition to electric vehicle and is building a robust portfolio for the same. So the business segments looks okay. Now let's look at the profit, because that's the most important thing, because that is one thing which drives the share price movement and the returns. And no matter how good the business segment is, if the company's sales are not increasing, if the company's profit are not increasing, then it means that the company is not growing, and eventually the share price will also not grow. Now I'm at the yearly numbers for this company. Now let's check and keep an eye on the sales figure. So it was 700 in 2011, then it increased to 1100, then 1300, then almost flat, then 1400, then it dipped in 2016, then again it increased to 1300, then again increased, then in 2019 again an increase, in 2020 a dip, in 2021 again a dip, in 2022 again it increased, and for the 12 trailing month again it is showing a increase. Now let's look at the profit. So profit was 199 crore, then it dipped even though the sales increased, so you can see a dip there, then again it dipped to 106, then to 88, then it started increasing, 124, 146, then 233, then 452, 560, then again a dip of 280 and 131 and 156, and again it has started increasing to 257. So looking at this, one thing is very clear, that the profit is not consistent. There is a lot of fluctuation in the profit, and the same fluctuation you were able to see in the chart pattern as well. Now what can happen, guys, is that this share can remain at this level like it was for a long period here. It can go down from here and consolidate for maybe 10-15 years at the same level, or it can also go up like it went here. But what will happen in the future, nobody knows. So we can only look at the past history. We can only look at the past data of the company. I would refrain myself from investing in this company. Instead of this, I would have invested my major portion or major amount in the large cap consistor compounder chemical company, which is Pidilite. So Pidilite is also from the chemical sector, adhesive, chemical, paint, these are all chemicals only. So let's do a comparison between HSCL and Pidilite. In 1 year return, obviously HSCL will beat Pidilite, but if you check 5-year return, you see a difference. And if I look at maximum chart pattern between HSCL and Pidilite, you will see a difference of day and night. You will see the chart pattern of Pidilite moving consistently, slowly in the upward direction, and for HSCL you will see that it is slipping on the ground. So if you are a long-term investor, the answer should be very clear to you what needs to be done. But if you still have a lot of conviction on HSCL and you think that this company may turn out to be a multi-bagger in the future, then you can be invested in this company. But in my view, I would not invest in this company at all. If somebody forces me to invest, then if I have a portfolio of 1 lakh rupees, then maybe I'll invest 500 rupees in this company, assuming that even if it goes zero, it will not impact my portfolio. So second company is Paramount Communication. So again, this company also gets rejected in the first criteria itself, which is of the chart pattern, which should go from bottom left to top right. You can see that this is like a U, which is not at all a good chart pattern. It has went like this from its top, and now it is consolidating, and you can see for how long this company has stayed at this level. Earlier also you will see that the company has shown an upside, but again it falls, then again it shows an upside, again it falls, and most probably you will see the same trend here as well. Let's quickly look at Paramount Communication as well, which is Para Cables. It is in the business of manufacturing wires and cables. Now I'm at the yearly numbers for this company. So keep an eye on the operating profit. You'll see that it was in loss in 2018. Till 2018 this company was posting loss, and in 2019 it started showing profit, 42, 45. Again the profit dipped in 2021 to around 17. Then in March 22 it is 20. Now in the 12th trailing month it is 34. So in this company you can see that it has recently started posting profit. It's a very small company, or you can say a penny company. Their profit also is not consistent. From 42 it went down to 17, 20, and now it is 34. And we don't know, maybe in the next few years again it will post a loss. And the market cap of the company is only 705 crores. So it's a penny company. I would suggest not to waste your money on the penny stocks. And friends, these companies which are very small, which are penny companies, these are easily manipulated by the operators, and mostly you will see these companies going up in the upper circuits, in which a lot of new retail investors get caught, and then you will see them coming down in lower circuits. And when it will come down in lower circuits, you will not even be able to sell your stock. So what will happen is, let's take an example. This share is at 36. You will see that it is continuously going up from past 1 week. You will start placing your orders, and then suddenly your orders will start executing, but you will see that the share has hit the lower circuit. Now you will be trapped, because then after that it will keep on falling and keep on giving lower circuits and lower circuits, and you will not be able to sell your shares also. And friends, these are very common mistakes. Everyone who has entered the market has made these mistakes in the beginning. But if you are a person who wants to grow as an investor, then you will start moving away from these kind of shares and start moving to market leaders, consistent compounder shares, because that's where the actual wealth will get created. And one of the purpose of starting this channel was also this, to help and guide the new retail investors so that they can learn from the mistakes that we have made, and they do not spend their starting 1-2 years struggling with these things. But in case you still want to invest in this company, then again the same thing, invest that much of amount which you are willing to lose. For somebody that amount can be 10 rupees, for someone 50, 100 or 1000 or 10,000. But that should be the amount which should not impact your portfolio. So as a study purpose, you can do that if you want to check that out of 10 stocks that you select on your own, on how many stocks you go right or wrong. If you want to do that kind of study and then improve yourself, then you can invest a little amount and see how you are progressing. Third company is Paradeep Phosphate. This belongs to the chemical sector. Let's look at the maximum chart pattern. And this company got listed last year in May, and since then it has provided 38% return. So since we do not have a history of this share, let's look at the numbers straight away. Now I'm at the yearly numbers for this company, and let's look at the profit. So in March 2017 the profit was 379, which increased to 424. Then it was almost flat, 442. Then almost flat or a very minor increase to 460. Then it increased to 549. Then an increase of 684. And now for the 12th trailing month it is still below the last year numbers. So if I have to select the top companies out of these three, I would select Paradeep, because at least this company is showing profit, although the profit are still not consistent, but at least it is not dipping. So for 3 years between March 18 to 20 it was almost flat, but it was still increasing at a very minor rate. Since this is a newly listed company, you will have to monitor the quarterly profit of this company, and if you see that the profit are increasing at a good percentage, then you can think of investing. But still again we have to follow the same rule. Since this again is a small cap company with a market cap of 4,900, only invest a very small portion of your portfolio in this company. But as I said, do keep a track on the quarterly numbers and also keep a stop loss. So these were my views on these three companies. I hope the video was useful. So that's it in this video. We'll meet in the next video with some more information. Thank you.